The ECB has been buying corporate bonds as a long-term bailout of the companies in Europe. They're technically not allowed to do this, and of course they said they never would, but clearly they are. So we have trillions in corporate debt purchased to keep their market afloat. The issue presents itself when these companies start failing. Anyway, you came here for the truth, so let me unveil that for you. Today we are going to look at what is happening within Europe. Let's begin. Steinhoff International Holdings plunged after its CEO resigned amid, check this out, accounting irregularities. And in English, that's fraud. Rocking a company that's rapidly expanded from its roots in South Africa over into Australia, Europe, and the US. The stock slumped as much as 72%. That wiped out more than 7 billion euros. Billions of dollars have evaporated. Why? Well, an auditor comes in from PwC, a company I talked about recently, and immediately the CEO says, I'm out of here. And right there, that's a red flag. Every single investor should be jumping ship. But who's left? Who is left? I'll cover that more in a moment. All right. The great unknown is the funding of the off-balance sheet structures that could spill over into fresh bank liability. And it goes on. Look, more than 84% of its market value in 3 days. Well, what you can see here is that this quickly could expand. What you see on the outside is one thing. They have a market cap, they have a stock price, there's PE ratios, there's total quantity of employees, there's retail locations, there might be online sales and everything else, inventory, and these are all numbers that you can see, but a lot of them exist off balance sheet. And these are impossible to predict when you realize how deep they go. So let me show you an example of this. This is a diagram from my book. This happens to be a CDO, but it's a silly description of what a derivative product looks like. And this is really what underlines a lot of these different investments. They call them investments anyway. In this example, car loans, mortgages, credit card debt, they're all put together, they are packaged up nicely, put a little bow on top and call it a CDO. Then they get their friends at the rating agencies to give it a AAA, the highest possible rating. What you will see here is that there could be good or bad, I think it's all bad, levels of debt within this package. And they say as long as it doesn't go bad all at once, we're good. But what if you're a company holding on to Steinhoff? Well, I assure you, you're doing bad right now. And that sets off this trigger, sets off this domino effect, where one company starts to lose out, and a second company, and a third company, and who knows what exists in these different types of derivative products. If something isn't, undergoing any sort of scrutiny, and they can do whatever they want, no underlying asset at all, and they're using it to gamble on, well, we have a big problem. Even the pension funds are getting involved in all of these different so-called assets. And that's a huge mistake. Huge. So remember what happened during the financial crisis and understand how quickly things go from everything is totally fine to run for the hills. Nobody trusted anybody, volatility went to a record high, and it was chaos in the markets. That's what could easily happen again any day because of the system that they've set up that they absolutely haven't fixed. Look at this. You can see the chart here that it has been just, completely destroyed in a 3-day period, and it's obviously not going to get any better. Now, What's interesting about this is that it peaked right here. That's 2016. Now 2016 is an interesting time frame. Why? What happened in 2016? Well, the font is probably too small for you to see, but this is the CSPP. Very important to know about this program if you don't already. I've covered it here on the channel before, and essentially what you're looking at is the EU bailout. This is what the ECB is doing. They are buying up corporate bonds, corporate debts, okay? So essentially bailing out 1,000 different companies to a different degree. And you'll see that Steinhoff was one of these companies. They've been bailing them out since 2016. And that's very interesting. Normally, you would see the stocks rising if there's intervention. In this case, however, it's been bleeding out. It's been bleeding out for essentially 2 years now. Slowly and now very, very quickly. Just a side note here, if you want to see the CSPP, you can just go to a search engine, type in CSPP ECB, and you will get that. Now, what's interesting about this Excel spreadsheet that's provided, you can look up, by the way, if you want to see the actual document I'm showing here, it's UBS is the one who actually provided this document. So if you look up UBS CSPP ECB, that's a lot of acronyms, you can actually see the document for yourself. You can search through all these different companies, but what I found interesting about this was that they don't actually put the name of the company necessarily. It's, in this case here, you would have to look up the ISIN, different number here, search that online, and then find it to make sure you got the right one. So it's a little convoluted, but anyway, that's the way it goes. So you can see how much that's been purchased, the maturity, and everything else. They've been buying all of this up until 2025, and that's when the expiry is anyway, the maturity. And you need to understand the level at which they've been buying these. The ECB has spent about $129 billion buying corporate bonds as part of its asset purchase program. A small portion of that money, small, don't worry, we promise, was used to buy Steinhoff's Europe AG 2025 bond, right? As of December 1st, the most recent data available, this Steinhoff bond was listed as one of the 1,000 distinct securities held in the ECB's CSPP program. Look at what has happened. They're receiving a bailout today and all the way back from 2016. You'll see that this particular company is not being saved by that bailout. They need to intervene on a more direct level. And that's probably what will happen. Either they will get bailed out or they will split up the assets and, one company will take some, another company will get the rest, and a whole bunch of people will lose their jobs. That's usually the way it works. So either they're going to get a direct bailout, a direct lifeline from the ECB, perhaps they'll get it from another country, or they will split up the company and they will then have to, let a lot of people go, as they say the term, to make it nice and easy and palatable. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it pushes these videos higher up into the YouTube search rankings, so I truly appreciate that very much. If you found this video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can look through them at Amazon. There's links in the description below. Take care. I just wanted to say thank you to each and every one of you out there who has given me a lot of support in the past day or two here. And, well, you know the situation, and I appreciate the support. That's all I want to say. Take care.